Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about trading routines, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's school community. Enjoy, guys.
So if you're new, the most important thing for you to really concentrate on is to find and design your routine. Your routine is essentially composed of two primary parts, basically multiple repetitive things inside of a big repetitive thing. And those multiple repetitive things are your daily trades, but the daily trade has a process, a beginning and an end. So what you do is you want to make sure that you have that fairly well defined. And even if you've been an experienced trader and you've been with the service for a while, this is something that you should think about in more detail. Because I put a lot of work into what my process is. And I think that's the key to developing consistency over time. The more decisions that I can take out of the equation and have them already pre-made for me, the easier it is for me to trade. And the process will do that for you. So every day, there's a very basic routine. What I would recommend is that you actually write it down, even put it on a piece of paper that's in front of you, and then start marking up that paper about what parts of the process that you think you need work on, or perhaps you haven't really fully fleshed it out either. But if I were to put it into big chunks, I would say there's the pre-analysis part or phase or routine. That pre-analysis is everything that you do from the time you wake up to the time you actually sit down and start doing your morning analysis. It's a super important part of your routine in that obviously you want to wake up. You want to get in the best mind, body, spirit that you can. You want to clear distractions. You want to do whatever you can that will put you into the best and most optimal position for trading. Breath work, exercise, coffee, whatever else it takes. And then when you do your more basic things, your analysis, I liken the entire actual trading process like a mini experiment. Every day we're putting on an experiment. We're creating a hypothesis, we're exercising the hypothesis, and then we're recording the results. So those are the three major chunks. So we're doing an analysis. Now, part of your analysis is not something that you do every single day. Some of it is a periodic thing, like keeping up your volume profile. You don't have to do that every day, obviously. Depending on where the market is, it can be anywhere from once a month to once a week. And right now it's probably closer to once every few weeks. But your analysis is essentially figuring out what you're going to trade that day based on our playbook. Now, your playbook, which is my playbook, you should have your own playbook, duplicate mine if you'd like, are all the trades that you've discovered that work within your current trading campaign. I don't know if you thought about that either. What is your trading campaign? Your trading campaign is big picture. How much capital you're going to put to work, what strategies that you're going to do, what's your risk tolerance, what is your capacity and tolerance for risk, and what are some of your goals? What are you trying to achieve? Where are you? Are there any other ancillary things? So that's your trading campaign, what you're coming to work with every day. And in your trading campaign, that might include this strategy, maybe another strategy that has some sort of correlation to it, maybe some investing, who knows? But let's just assume that it's just the zero DTE thing. Within that zero DTE thing, we have a few strategies. We have our primary strategy, which is like the stalwart that can work across a wide range of market types and volatility regimes. We call that the single out of the money classic butterfly. And then there are a bunch of edge cases that handle when volatility is super low or volatility is super high. We might even look at near end of day strategies like gamma scalping, or we might look at unusual pricing conditions. We call that a mother of all flies. Those last two I don't officially have on my playbook. The four primary things I have in my playbook are the single out of the money fly, the time warp, the Batman, and then the big ass fly. The big ass fly is a specialty case that we also use as one of our analytical tools, right? So that's the playbook. So what we're doing every morning is we're analyzing the market, trying to figure out what are we going to choose from our playbook. And from our playbook, we already know how all these trades work, right? They wouldn't be in the playbook if we didn't. That's because there's another process that we use that's even bigger. And I call that the strategy life cycle. The strategy life cycle is something that you're you're constantly looking at what other types of trades you could add to your campaign. Your trading campaign is all that entire playbook and everything else, and the amount of money that you can put to work. So that's a whole nother discipline where you come up with these new ideas like the MOAF or the gamma scalping is a good example. And you plug those into your strategy life cycle to test them out and give them some time to curate and figure out whether or not they're going to be eventually in your playbook. Your playbook is also looking at things that are special cases that are within each one of the strategies. So your playbook should be a little bit more nuanced. Maybe this is additional notes that you have. See, my playbook is primarily expressed right on my VIX chart, right? And I can see what I'm doing. But I have my own internal notes on each trade that make each trade a little bit more depth than just simply choosing a width, because there's an entire strategy attached to it. We have a profit management strategy. There's also other things that we do in the process of that analysis besides just trying to figure out what strategy that we're going to do. And I had mentioned your volume profile, structural analysis, and figuring out where those are. But within that, there's the idea of staging and creating scenarios. So staging your trade is something that you do when you're first doing your analysis and figuring out, okay, I'm going to do these kind of trades out of my playbook. I'm going to put them up on the Analyze tab, and I'm going to look at them and see if this is really what I want to do. And all that preparation, everything that you do there is designed specifically to take a lot of the questioning and the misactions off the plate. You're doing as much as you possibly can up front, getting everything prepared and what you're going to trade and when you're going to trade it and why it's going in there, when the event's going to happen, all that stuff. And then when it's in there, how you're going to treat the trade, how you're going to manage it. You already know this stuff. You create scenarios once it's in there. What happens if price goes this way or that way or no way? All of this is part of your process, but they're main chunks. Analysis, that includes, like I said, your VIX, direction, market structure. And then you have your entry event and your management and your closing event. So you can look at all three of those as your trading event, I suppose. After you've entered a trade, managed it, and then exit it, and either with a loss or a profit or whatever it is, you need to make sure you record it. Some of that recording, there's two different types of recording. There's the log, which is gathering up all of your objective information. And then there's the journal, which is gathering up all your subjective information, your charts, your graphs, the annotations, anything that you want to bring to bear on why you made the decisions that you made. You want a good record of all those things because we still haven't talked about the bigger process, which is the retrospective that you do that encapsulates each day. So I'm just describing the day. You do that day, then you do another day just like the previous day, then another day and another day, and then that all gets wrapped up into your retrospective. You should be spending, 10 or 15 minutes. You don't have to spend a lot of time, depending on what you find. If you find something worthwhile spending time on, you're exhibiting some really poor behavior that's causing you to do bad things, then you need to address that, obviously. But most of the time, your retrospective is a relatively clean thing. You're updating your charts, you're updating and maybe looking at your performance and where you are, looking at your actual performance in terms of the process that you put on. Are you doing everything that I just talked about? Are you staging? Are you setting things up? Are you creating scenarios? Are you analyzing? That's super important. If you're not doing any of those things, you're just like, hey, it's this and I'm going to put it on and just wing it. Or you make ad hoc decisions that aren't any part of the process or your strategy. Those are all things you need to record. You must record those things. Because they're obviously not part of your strategy, but you have to record them anyways and say, hey, I did this because I was a dumbass or whatever. Or I had this fantastical idea. In general, fantastical ideas come into my head all the time, but I try to suppress them as best I can. Sometimes I can't.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.